Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're going to discuss and review the question, does velocity banking really work? Okay. And what we're going to do is kind of confirm it in a way that doesn't involve math. And I know that's kind of weird, right? But I thought about this a lot when I was actually offering or making offers in real estate. And I wanted the seller to give me seller financing, right? And so one of the things I was asking, if you don't know what seller financing is, all I was saying is that, hey, seller, instead of me going to the bank, I want you to be the bank. And you might be like, what does that mean? It's like just okay, so what that means, and I'll just do this, seller financing is you're paying the seller payments over time rather than one lump sum, right? So let's say like, oh, the seller says, I want $200,000 for my home. And I'll say, okay, I could just give you the $200,000 now, or you can, issue a mortgage, a 30-year mortgage for maybe like 3%, and for whatever payment at 200,000, and you get X amount of money. And this is what I did, and I probably need to do this better, but let me actually go to bank rate loan amortization calculator. Okay, so let me just go here. And one of the things that I try to do with like some real estate sellers is, because I didn't have money or access to money, I wanted them just to kind of let me pay over time and quote 100% finance it. So let me just show you here. So I would just say, hey, if instead of me going to the bank and giving you $200,000, let me just pay you 1,200 a month. I'll find a tenant for like 1,500 a month, and look at how much money you're making over 30 years, right? You'd make pretty much double your money. You wanted 200, you might get 431,000, right? And one of the things that I realized is like, oh my goodness, why wouldn't I do that, right? Like if the bank's doing that and they're making bank, kind of pun intended, why wouldn't I do that, right? And so let's just do this. So potential result, let's see, potential result after 30 years, you'll get double, more kind of like more than double of what you're expecting, right? So you thought you were just going to get $200,000, just one payment, just get the whole thing off. But why not be the bank, take periodic payments, and get $431,000, right? So actually, this needs to be a four in total, okay? And so that's pretty crazy, right? And I was actually explaining that to them because I wanted to, buy what's it called? A property, no money down, right? And in fact, I was actually using 3% interest rates. I was just like, oh, if we do a mortgage and 3% interest rate and I pay you over time, you're going to get 50% after 30 years. And so that's how I was explaining it. And actually, the seller was privy to it, but because I was like such an amateur and a noob, I didn't follow through. But one of the things I was thinking is like, yeah, you know, I'm actually going to tell you that you might get 50% of your money at a 3% interest rate. But guess what? I'm going to do velocity banking on you. And then it actually, like, this was a light bulb moment to me where if I was the seller, so think, and here's the thing, I highlight this to understand finance, don't think like the borrower, think like a lender, right? And so if this was me selling this house, so think this is you, okay? This is you. So I'm going to highlight this, that you're going to sell a home. You originally want $200,000, and you get into a negotiation with the buyer and says, you know what? I don't want to pay you 200. I want to potentially pay you 400, or maybe it could be like 300 with all the interest, okay? But let's just say we'll just do 3% mortgage. So 3% mortgage, 303,555. So let's just do that. So 303,555. Okay? Listen, you wanted 200,000, I'm potentially giving you 300,000 if we just do this 30-year payment structure, kind of like a bank. Why do you think they have the biggest buildings in every downtown? And then your seller might actually go for it, right? You might actually go for it. But what if I did this, right? So what if, because I was using a HELOC or home equity line of credit on one of my other properties, I was paying I have so much cash flow and I'm just using HELOC to pay off 10K at a time, right? We've seen that in the other velocity banking videos. And so this 30-year mortgage is going to be maybe like a 4-year, a 5-year, 7-year mortgage, right? We'll just say 5 years, right? And so if this becomes a 5-year mortgage, and let's just do this, let me just do term of 5. Can you do 5 years? Let's see what we get 7 years or 10 years. I'm sorry. Look at the interest. Even at 10 years, you get this little itty bitty 31 grand rather than 100 grand, right? And so here's the thing. Here's how you know if or don't know if it works. I'm not gonna say, hey, it works, right? Because I want you to decide. But one of the things that I want you to think about is, let's say you were selling a property using seller financing, you being the bank as a lender. Don't pay me $200,000 today, pay me $200,000 over 30 years. And then and you agree to that, right? And then someone just pulls out that HELOC and is just paying chunks over time to you. Would you be happy? Okay, so let me just actually ask you this. So, question: would you be happy if somebody did velocity banking to you? Like, you were expecting this $300,000 payout over 30 years, and it turns out that they're only paying like 210, and it almost feels like they took advantage of you. And this is why like some lenders have like prepayment penalties, right? Because they don't want you to pay it off too quickly because they're not going to make any money. But it might feel like, hey, like I was expecting just these small payments over time and to get like this 50% return at this 3% mortgage, but you did this weird thing. And here's the thing: as a lender, I'd be like, don't do that. That's a higher interest rate line of credit. You're going to lose money. And if somebody did velocity banking to me, and I realized that this 30-year loan is going to be 5 years because they're doing it to me, I probably would not be happy. So here's the thing: if the answer is yes, that you're happy, velocity banking doesn't work, right? Because if using a HELOC and then using your cash flow to pay the HELOC, they're doing that to you, and you're still happy. That means it doesn't work. The strategy doesn't work at all. The person's not going to pay off their mortgage, or they're not going to pay off early. They're going to pay off in 30 years, right? Which is the goal of financing. You want that payment just to kind of live forever. Well, 30 years, which is almost half a lifetime or a third of a lifetime, right? So if somebody did that to you, then velocity banking doesn't work. But if it's no, then velocity banking does work, right? And this is what people don't understand with regarding to financing, is that you have to really think of it from lenders' perspective, even credit scores. If they issue you credit, right, where do they want you at? Do they want you to be the best, most responsible borrower who pays everything on time? No, right? I'm going to give you a score based on how much money I can make off of you. And so if you have no credit and you haven't applied for any sort of financing, um, ever, and I don't have a history of you making payments with interest, why would I give you a high credit score, right? And you can apply this to other things as well. So if I'm giving you a 30-year loan and you're using this weird strategy of using a higher interest HELOC for whatever reason, and you actually pay off this loan in 5 years, I'm going to be pissed, right? Because you took away all my interest and profit, right? And that's kind of how you know if something works or not. If you're at the receiving end of the strategy, would you be happy? And if you're happy that people do it, like, yeah, this is a scam because, oh, you're using a 15% HELOC, then again, if you're happy because they're using a 15% HELOC and it's not effective and that loan doesn't significantly change, it doesn't work. It's a scam. But if you're kind of pissed because this loan term has significantly decreased and they paid it off early, then guess what? Then it is effective enough, especially if you're pissed off as a lender, to be an effective tool in your arsenal, right? So this is what you have to think about. And this is what, people kind of like nitpick and do all this stuff, but really just think of it from the lender's point of view. And this was what I was going to do, and I haven't done this yet. And to be honest, I feel a little bit guilty that I might convince someone to take payments over time, and then the psych, I paid it off in like 3, 4 years, right? I mean, if I do it to a bank, no big deal. But if I do it to an actual individual seller who thinks like this is going to be my retirement fund, and psych, I paid you off 3, 4 years, um, I might feel a little bit bad. Okay, well, this is how you might know if velocity banking works or not. It's a really simple, easy way. Just think you're the lender, right? If you sold a home and you did financing, right? Tell the buyer, don't go to the bank, go to me, pay me over time, and then they paid you off early. And with velocity banking, whether they're using velocity banking or not, it doesn't matter. But what I'm saying is that if they did use velocity banking and it made a significant dent to the loan, doesn't that mean it works? Right? People say, well, this doesn't work because well, again, if somebody did that to you and you were the lender and you're pissed because, whatever strategy you use, including velocity banking, um, they use velocity banking. It's just another tool in the toolbox, right? It's not the only strategy out there. It's just what we talk about here because people are just interested in learning about it, right? But yeah, so this is Cranial Anti Mentorship. If you're interested in joining our group, go ahead and click the Google form link below. Again, easy way to know if velocity banking works or not without doing math, and hopefully you learn something. But here's the thing: in our group, we don't actually just learn about velocity banking. We learn about a lot of other things like real estate investing, financial literacy. So don't just limit yourself to velocity banking. I know a lot of people just want to focus on velocity banking because they're broke, right? But you're going to get out of it once you learn all the tactics and strategies to pay off debt. And I will go over that in every single video almost here, right? Okay, well, that's it, everybody. Have a great day, and we'll speak next time.